I'm sure people have heard marry the house and date the rate, but it's so true. I mean, I know there's some YouTubers out there saying don't ever use that line, but it's so true that you can buy the house and then eventually rates are going to increase and decrease. You can actually time when to refinance. Now, trying to time when the best time to buy is, who knows? Hi friends, it's Dave Domingos here, and I have Dan Laver on today for a quick market rate update. We're essentially in June of 2024, and we know rates are kind of fluctuating up and down, right, Dan? So can you give us a digest on where we're at now and what to expect over the next couple months or quarter here?
Yeah, absolutely, man. Interest rates coming in right now, they're actually getting a little bit higher. We're at a 3-week high right now. And what it's doing is it's causing purchases and refinances to lower a few percentage points down compared to the previous month. Along with that, too, we're also seeing some other outside factors outside of the United States. There's talk of the European bond market looking at lowering their interest rates. Their market doesn't necessarily influence ours, but if they're looking at lowering, then that could have a kind of a universal effect on other banking sectors as well. So I'm looking forward to seeing how that comes out. The US economy, though, is doing fairly good. I mean, our durable goods are up, which means people are spending money, not taking out loans. The only thing that we're really seeing, which is in the real estate world, and if you're looking at buying a house or selling a house, is just that prices remain high, rates remain high, inventory's low. And so we're just in this perpetual purgatory right now of real estate where we're just trying to wait for one thing to move, whether it's more housing or whether it's lower interest rates or new development, what have you. So what banks are doing right now to combat that is creating more streamlined processes. So since we're already at a standstill, we can't lower our rates even more, lower our margin. Everybody's competing right now, and so margin's super tight. So now we're just more investing in efficiencies and new programs to help close loans faster and shave off cost on the margin, so that way we can still compete and provide affordable rates.
So for we all realtors right now are getting, should we buy now or wait? What would a lender tell a realtor to share with a buyer?
Yeah. So and this is just my opinion, if you have the income, the assets, and the credit to buy, then that's your move that you should start looking at your options, right? There's never going to be a right time or right place when you buy, but there's always a right time and right place to refinance. So you can't really time a buy. Yes, you could say, well, interest rates are lower, I'm going to buy it here, or interest rates are higher, I'm not going to buy here. But it's really up to the realtors to say, hey, well, if this place had a price cut of $25,000, then what we can do is, instead of just lowering the price and taking that lower purchase amount, you can put it back to where it was, use that 25 grand and throw that into covering all of your closing costs, your inspection, your appraisal, processing, underwriting fees. And then you can also pay down the interest rate permanently to get it lower. Or you can go into a temporary buy down, which is where you can reduce your interest rate by a whole percent and get from out of the 7s and the 6s to the 5s and the 4% interest rate ranges.
Yeah, I'm sure people have heard marry the house and date the rate, but it's so true. I mean, I know there's some YouTubers out there saying don't ever use that line, but it's so true that you can buy the house and then eventually rates are going to increase and decrease. You can actually time when to refinance. Now, trying to time when the best time to buy is, who knows? I mean, it's so all over the map. No one knows that, but your interest rate's real easy to actually refinance, right? When the time's right, somebody can come to you, do it, refinance, and really date the interest rate. So I'm against those people that say, now if it was different if the agent just wanted to make money and wanted to make a sale, but long term, I mean, I'm looking at all the analytics here on. I look at Keeping Current Matters a lot. Probably a 2 to 3% increase in house prices over the next 5 years. So a home today that's say $1 million, in 5 years you're going to build another about $150,000 in equity.
Yeah, and it's so crazy. It's so crazy. If we look at the latest Case-Shiller report, Case-Shiller tracks the home appreciation around, and even the city. San Diego is the top #1 home appreciation right now. So if you're here, you're feeling the pain of missing out, where you could have bought and then took advantage of those refinances when they did happen. So you're so right. It's way better to buy and be in a position to refinance down the road, or just get a really big seller credit right now, get into a temporary rate, and then as the years go by, it'll adjust back down to being in the sixes if you buy it down the low right now. But I think if you wait to buy and you time buying when it's a good time, everybody else will be doing the same thing, and you're just going to be competing against a lot of people that thought the same way as you, versus talking to a consultant like yourself and myself, getting educated on what you can do right now if you have the means to, and then what that's going to look like if you then take that next step, and then what refinancing looks like down the road, and what we think will be the perfect time to refinance.
Okay, the magic question: when do you think rates will drop down to the mid sixes or 6%? Do you have any timeline on when that could be a possibility?
I do. What's even more fascinating is that the Fed actually took out future rate cuts. They did that under the radar. So I'm thinking when we start getting closer to the presidential election and the first to second quarter of next year, I think we're going to start seeing those rates start to adjust a little bit here and there. But with the Fed taking out future rate cuts, it's going to make us wonder how big are those 3 scheduled rate cuts going to be impacting that, and then down the road, how much are they going to lower them to if they're reducing them and only scheduling in 3 or 4. So I'm hoping that we'll be able to see that by the first quarter or the second quarter of next year.
Dan, how can people find me if they need to find out about a loan, let's say here in San Diego?
Absolutely. I'm on Instagram as Laver Lens, LAVERLENDS. I'm also on Google. So if you Google Dan Laver Loan Officer, you'll find me even easier.
Awesome. Hey, thanks, bud. We'll check back in, let's say 2 or 3 weeks, and see where we're at. Sound good?
Yeah, let's find out what happens in 2 to 3 weeks. It's going to be so exciting.